Welcome to What to Know About TRS Retiree Healthcare Before You Retire. We hope that this video will provide you with the needed information about the Teachers Retirement System's retiree healthcare and provide some 2026 cost examples of that healthcare as well.
What we need to always remember is you are guaranteed the retirement annuity through the inviolable contract. But with your health insurance, you are only guaranteed to have access to group health insurance coverage. The details around that coverage can change. Health insurance costs fall under those things that could change and are not under the inviolable contract. We know two things about health insurance. The cost of the insurance typically increases, and over time, what we must pay typically increases as well. So, as much as possible, it is important to be as prepared for your healthcare expenses in retirement as you can. One of the major things the Board of Trustees at TRS spearheaded was the passing of House Bill 540. This was implemented to help your medical insurance fund become more stable and to share the cost of medical insurance between four different entities. So, the passing of the shared responsibility law called upon our active teachers, employers, retired teachers under age 65, and the state to all share the responsibility of the health insurance cost.
This slide shows the impact more than anything else. When we started the shared responsibility in 2010, we were 7.5% funded and facing our members paying much more for their insurance coverage. And today, we are 89.1% funded on the medical insurance side. This has nothing to do with our pension funding. This is only the medical insurance. And this percentage will only increase as long as all parties continue on this track.
With every paycheck, our TRS members are contributing to their retirement account, but they are also contributing to the Medical Insurance Trust Fund. Regardless of account type, 3.75% of the contributions from non-university members is going into the Medical Insurance Trust Fund that ensures the availability of retiree health care insurance in the future. TRS University members have a different contribution rate with 2.775% going into the Medical Insurance Trust Fund.
This slide for service retirements shows some continuing trends. What you see includes return to work retirements, but not disability retirements. You can see by far the biggest numbers are at age 55 and age 60. Of course, 55 is the highest at 401 because that is retirement eligibility. And it also allows for the high three salaries to be used once the member has 27 years of service. In comparison, look at the number of individuals retiring at the age of 54, just 33 people. Obviously, people hang in there one more year to retire at age 55 to get the average of the high three salaries for the calculation. The next highest bar is age 60, where there is no longer a penalty for individuals retiring with fewer than 27 years. That was 191 people. The average retirement age for service retirements in fiscal year 2025 was 58, and 5 times as many teachers retired at 65 and older as did retire under age 50. All these trends are watched by the Board of Trustees and TRS administration. Retired teachers provided tremendous economic impact all across Kentucky. Overall, TRS pays retired teachers about $235 million a month in benefits, either pension or health insurance. Since 90% of those benefits go to the 87% of retirees who stay in Kentucky, that means more than $2.3 billion a year is injected into Kentucky's economy from the pension benefits alone. The impact of Kentucky teachers is also growing with age. TRS has more and more retirees over the age of 80 each year. On this chart, as of December 31st, 10,480 retirees were over the age of 80, and 43 were over the age of 100.
TRS offers two health plans for retirees. The KEHP, Kentucky Employees Health Plan, is for those under age 65 and not Medicare eligible. This is the same plan as what our active teachers, state employees, and classified employees have. So you will have the same insurance in retirement that you have had while teaching if you are under age 65. An account that comes with certain health for our Medicare eligible retirees and those over the age of 65. There is only one plan for these members as it is exclusive to our TRS members. As an active employee with state-sponsored insurance, you may have a health reimbursement arrangement or a flexible spending account, or you may be saving your rewards with Castlight. Before retirement, there are a few things you need to know about your HRA, your FSA, and your Castlight rewards. First, with the health reimbursement arrangement, this is a reimbursement account that comes with certain health plan options. So if you currently have a KEHP option that includes an HRA and you select that same option when you retire, any remaining funds on your employment HRA will roll into your retirement HRA. If you are age 65 or older when you retire and will be enrolling in the Medicare eligible health plan in retirement, there is no HRA with the MEHP plan. So any HRA funds you have available to you must be used before you retire or they will be forfeited. If you currently have an HRA because you waive the group employment coverage, that waiver HRA will also terminate at retirement. There is no waiver HRA in retirement if you waive insurance coverage with TRS. A flexible spending account is adding additional pre-taxed funds into a health savings account. This is only available to active employees and not TRS retirees. FSA money must be used by the end of employment and before retirement or it will be forfeited. Again, any FSA funds will be forfeited at retirement. Any expenses incurred after the end of employment will not be eligible for reimbursement. A flexible spending account is not available for our TRS retirees.
Also, if you are accumulating and using Castlight rewards, those rewards need to be used by the time of the retirement if you are retiring age 65 or older and will be enrolling in the MEHP insurance. MEHP uses a different type of rewards program, and Castlight rewards do not roll over into the MEHP. TRS has a very dedicated insurance department working with new innovations to help TRS retirees better manage their health care. That's why we started the Personalized Medicine Pilot, a DNA medication partnership program that was started with retirees, TRS, the Know Your RX Coalition, and Coriell Life Sciences. This personalized medicine program uses DNA testing to help you find out which medications work best for you. DNA testing is available for free to our MEHP retirees. You will want to contact Coriell or go to their website when you qualify just to get started.
Good news for those of you who have time in another Kentucky state retirement system. TRS has reciprocity with those state-administered systems, which means if you worked as a teaching assistant and paid into CERS, or a state worker and paid into KERS, you are considered a reciprocity member. But to be very clear, we are separate systems, and we will remain separate systems. Your Kentucky Service Credit is combined for retirement eligibility as well as insurance eligibility. Eligibility requirements are different in each system, so you must check with each system to know the specifics that relate to you and your individual retirement. TRS will count your original entry date as first paying into any Kentucky public retirement system, regardless of which system that is. You will want to check with each system regarding the cost of your insurance before you retire to know your most cost-effective option. Just remember that you cannot get more than one combined year of service credit between the two different systems in any given fiscal year. The cost of insurance is based on entry date and years worked. This does include the Kentucky Earned non-refunded reciprocity years, along with the actual insurance option selected. These years do not include actuarial purchases made after January 1, 2021, because you cannot purchase actuarial time for insurance eligibility or to move into a different insurance tier. If you have made or plan on making an actuarial purchase for your retirement, be sure to check with TRS regarding how this will affect the cost of your insurance in retirement. Based on your entry date and years of experience, which is your service credit earned through actual time worked, there is a graduated scale of the single supplement amount provided on your behalf toward the insurance premium. Having the maximum supplement does not mean you pay nothing. This supplement is not inviolable and could change with future legislation. TRS 1 is for members who entered prior to July 1st, 2002. Again, insurance is not free, but receiving the maximum toward the cost of insurance should be a very important goal. TRS 2 is for members who entered on or after July 1st, 2002 and before July 1st, 2008. TRS 3 and TRS 4 is for members who entered on or after July 1st, 2008 and are not eligible for insurance until they have at least 15 years of experience. For TRS 2, TRS 3, and TRS 4, supplement increases with 20, 25, and 26 years of service, and of course reaches the maximum with 27 years of service. Each of these service years should be small goals for you. Retiree insurance is not free. Again, getting the maximum supplement toward the premium is very important for TRS retirees. All members, regardless of entry date, receive the full subsidy medical benefit with 27 years of experience.
The Kentucky Employees Health Plan for members under age 65 and who are not Medicare eligible consists of 4 plan options and 5 coverage levels. You will select one of each for your KEHP coverage. Our website, trs.ky.gov, has a benefits grid for detailed information regarding each option.
If you are unsure of what KEHP plan would work best for you, information in the Benefits Selection Guide can help you with your decision. On the TRS website, under Retired Members Healthcare, you will find a Benefits Selection Guide. This guide will give you benefit highlights, Living Well Promise explanation, and deductibles. Page 7 of the benefit booklet is a great overview of the 3 plans, and it explains different scenarios for deciding on which plan would be best for your situation. Page 8 of the benefits booklet begins the benefits grid, showing the deductibles and your out-of-pocket maximums.
Retirees on the KEHP will pay the shared responsibility amount. The 2026 cost of shared responsibility for retirees taking the KEHP under age 65 insurance is $202.90 per month. This amount is part of the premium cost for KEHP coverage. It is based on the Medicare Part B premium cost. If you are waiving insurance through TRS and taking other state-sponsored insurance with another retirement system, you will still be paying a prorated shared responsibility cost. If you are waiving insurance through TRS and not taking state insurance with another agency, you will not be paying shared responsibility cost. This KEHP cost chart shows the full plan cost for 2026 and the member's monthly cost with maximum supplement for each plan option of the Living Well CDHP, Single, Couple, Parent Plus, Family, and Family Cross-Reference. If the supplement for the single option is no longer funded in future state budgets, the member will most likely be responsible for the full monthly cost of their CDHP under 65 insurance. Then on this KEHP cost chart, it is showing the full plan cost for 2026 and the member monthly cost with maximum supplement for each plan option under the Living Well PPO, Single, Couple, Parent Plus, Family, and Family Cross-Reference. Again, if the supplement for the single option is no longer funded in future state budgets, the member will most likely be responsible for the full monthly cost of their PPO under 65 insurance. Once you turn 65, you are no longer eligible for the KEHP insurance, but you are now eligible for the Medicare eligible health plan. Anyone 65 and older or who is Medicare eligible and meets the service requirements could be eligible for the ILMI-HP, which consists of the Medicare Advantage currently administered through Humana, Medicare Part D prescription plan currently administered through Express Scripts. Coriell Life Sciences works with your doctor, the Know Your RX Coalition, and you to make sure your medications are working for you. The Know Your RX Coalition helps all of our members with their prescription needs, and then Silver Sneakers provides members with those free gym memberships.
If you retire when you are 65 or older, you will enroll in the Medicare eligible health plan and are no longer eligible for KEHP insurance. Upon retirement, KEHP insurance is only available for those people who are not Medicare eligible. To enroll in the ILMI-HP, you must sign up for Medicare Part B. Since you are still working and age 65 or older, enrolling in Part B will consist of contacting Social Security and having your current employer complete the required forms to confirm you have had active employer insurance. There is a cost for the Part B that you must pay to Medicare, and this will ensure that Medicare will not charge you a Part B penalty. Also, sign up for Medicare Part A only if it is free to you. If you cannot get Part A for free through your own employment, you may be able to get it free through a spouse, ex-spouse, or a deceased spouse's employment. However, if you cannot receive Part A for free, do not sign up for that. The MEHP will cover the Part A claims for you, just like anyone else who receives Part A for free. Contact Social Security for information on signing up for Medicare when retiring at age 65 or older.
If you turn 65 while actively employed, there will be a couple of forms that you will need to have to sign up for your Medicare Part B through Social Security. The request for employment information is to be filled out by your employer to show that you have had continual health coverage since turning 65. And the application for enrollment in Medicare Part B, medical insurance, is what you will complete to sign up for Medicare Part B. Members and spouses must pay the monthly Medicare Part B premium, which is $202.90 in 2026, and any additional income adjusted premium billed by Social Security. HP is $200 per month for the spouse. If your Medicare eligible spouse is taking the ILMI-HP insurance, they must have Part A and Part B through Medicare to be eligible. If they elect not to enroll in the ILMI-HP at that time, they will only be able to enroll due to a qualifying event in the future. Marriage, member death, and turning 65 are the three qualifying events that have the 30-day deadline to enroll. If the spouse loses insurance coverage from an employer, retirement, or COBRA, a letter is required for termination date and reason. If the spouse was unable to be covered because the retiree did not have TRS coverage, the spouse may be added when the retiree enrolls in TRS coverage as a tag-along. Remember, the spouse must have both A and B of Medicare to be eligible. This slide shows the current monthly cost for the Medicare eligible health plan if you are 65 or over when retiring. It is also based on your entry date and your years of service, just as the KEHP insurance is. It is broken down into TRS 1, 2, 3, and 4. The total cost of the ILMI-HP is $200 a month. This chart will show you what you will pay, if anything, once you are on the ILMI-HP coverage.
Your retirement decisions are exactly that. They are your decisions. So make informed, responsible decisions, including the current and future cost of health insurance. That could play a big role in when you want to retire. Create a budget based on a projected retirement income. Make sure you know what percent of your last year's salary you're going to be earning in retirement so you can adjust your retirement budget accordingly. Know how your individual retirement may be impacted by future pension legislation. And know the cost of health insurance changes annually, and the level of coverage could also change in the future. So just be prepared with these things when you're going to retire.
As we wrap things up, I want to mention insurance coverage for members who return to the workforce. If you are eligible for employer-sponsored health insurance through an employer that participates in one of the Kentucky state retirement systems, then you must take that coverage. You will contact our office and we will need something in writing or an email from that employer stating when your coverage will begin. TRS will then terminate your insurance on the last day of the month that you are hired with that employer, and they will start your insurance with them at the same time. Once you decide to end that employment, then that is a qualifying event and you can return to TRS coverage. You will have 30 days from the loss of that coverage, but you will want to contact us before your employment date ends to ensure you do not have a lapse in coverage when you return to TRS insurance.
We do have a lot of places and sources you can trust that will provide you with the most current and up-to-date information from your retirement system. Of course, we have a lot of information on our TRS website. You have your Pathway portal that will show you your own account information. It will also allow you to submit your retirement and insurance applications online. Then in the future, you can make any changes you need to make or see your retirement accounts. We are also on Facebook, now also on Twitter, now known as X. These are the places we will use to get information out to you immediately. Since social media is so popular, that's where we can get things to you that we know are important now. And then we also have a YouTube channel that will show you all of our informational videos that TRS has available for you currently. Feel free to contact Teachers Retirement if you have any questions about your TRS retiree insurance. We are open 5 days a week, Monday through Friday, from 8 a.m. to 5 p.m. Eastern Time, and we are here to help you with any needs that you have. Thank you for giving me your attention and your time today, and as always, thank you for being a Kentucky educator.